Alrighty, we are live from Columbus, OH, and this is the Ramsey Show After Show. I'm Coach Steve Money. I am not just some guy on the YouTube. I'm a Ramsey Solutions certified financial coach. What volume all we have? Yeah, that's probably good enough. Let me know if there's a problem you can't hear me, and I will kick it up a little bit. Alrighty, as I said, Ramsey Solutions certified coach, financial coach. And for my financial content, you just youtube.com/coach Steve Money. You scroll past the Oak Island playlist and you'll see the Ramsey Show After Show playlist and the Answering Your Financial Questions playlist as well. And the music playlist has 11 Ramsey adjacent songs in there. Do enjoy them, such as How to Do the Baby's Dibs Right. And that has information in there about, or verses, lyrics in there anyway, about how people misinterpret the baby steps. They're not that hard to understand, but apparently some of it I think is some people sometimes not understanding it, but not wanting to understand it. So they talk themselves into whatever they want to do. Like one of the big ones that starts off immediately is you saved $1,000 to start emergency fund. You don't save more than that and add to that until you are in step 3. You also don't take any of that $1,000 to then pay off debt. Some people think that that's the way to do it too. So that would be a NAR. Market report. Let's make sure we are completely up to date. We are. And the Russell Small Cap Index, the most up to date, but everything green, so you cannot complain about that. You can complain about it, but you probably shouldn't. Save it for the days when it's pink like this, because that means down at the red arrow. See what the rest of the planet looks like. Well, it went. Mostly up there for that, and mostly down in Asia. Currencies, euro up on the dollar, yen up on the dollar, British pound low, bloody quid up on the dollar, Canadian dollar up on the US dollar, and Australia said NAR to the US dollar being worth more than the up again, as far as the exchange rate. Australian said NAR, mate. What else can we talk about today? Check futures. Futures all up as well. NASDAQ, S&P, and Dow. All those are up. What else do we need to talk about? Uber did not make money and they don't have a good forecast for next time, so they went down today. ARM is a British firm. I forget what they do. Investments, I think. And they did well, and their price was up, I believe. Let's check it. I was trying to check it and remember. Yeah. Oh no, they did not do. They went down. Let's see why. Just to make sure. Oh, there's no article that says it. Oh, fails. Oh, falls despite earnings beat and solid outlook. Right. So sometimes these traders you can't do anything for them. You beat the earnings that were projected for you, and plus you said, "Hey, we're going to make even more money next quarter," and they don't think it's a good idea. Of course, some of that's like your day trader mentality where they're just trying to, like as soon as somebody saw it get up here to the high right there, where in the gray, right after hours, they said, "Okay, sell so we can lock in that amount of gain, and then we'll buy it again down here." That stuff happens all the time. What else we got here? Oh, Qualcomm. Qualcomm up today during trading, but after hours, after the earnings report. Tops estimate for earnings and revenue on strong smartphone demand. What about the outlook? Does it say anything about the outlook? Growth. Okay, well, if they're not going to tell me what the guidance is, what? I got to click on it to find out? All right, fine. Optimistic. Okay, so again, Qualcomm 2 said, okay, so we beat what you thought we were going to make. We made more than that. And next time also, we think we're going to make more money again. And so, but that's just the way it goes with the market. And I think that's all we have tomorrow. I don't know what Lindy is, PLC. I don't know what that is. Eli Lilly is pharmaceuticals. Let's see though, despite the, I mean, and this is why the NASDAQ up only 0.19% is because the top ones were down apparently, except for the Microsoft and the Meta. Everything else down in the top 6 stocks, followed by Google. And AMD would be the other one. I believe they were down yesterday despite having good numbers as well. AMD, they were down another 6.27% today. So that's just the way it goes sometimes. But again, if you are in all of these categories, small, mid, large cap, and international, then you should be fine today, despite all of these big boys. And this is why you don't have single stock. That's why you wouldn't put everything into Google or even Apple. That's why you don't do that. That's why you diversify and have mutual funds with a bunch of stocks in them instead of just different ones. See what we got for articles. AMD stock slides. Okay, despite, okay, so I did look at it. I thought I'd looked at it before. I didn't remember I set them as separate tabs for news to give that information. Let's see what else we got. From the New York Times, U.S. trade deficit hit record in 2024 as imports surged. All right, it's good to know. You don't want to be too dependent on those and those imports. If the tariffs get put back on, they're gonna be more expensive, so maybe they won't be as much in demand. People will buy American things. This from CNBC, the economy section. Private payrolls expanded by 183,000 jobs in January, topping expectations. ADP says, they said that slightly more than the 176,000 in December. I mean, that's 7 more thousand. So is that slightly? I mean, I guess in terms of that, maybe. Pay for workers who stayed in their jobs grew at 4.7% annual rate, or 0.1 percentage point more than in December. All right, well, I mean, that's more than the 2% that inflation is supposed to go up every year. Granted, they're not doing enough about that to make that happen, so it's going up more than 2% a year. Let's see. All of the job creation came from service providers who added, oh, all of them? All of them, okay. Who added 190,000 positions while goods producers lost 6,000. Oh, interesting. Interesting. All service providers. And that's why we look at the articles sometimes, because then you learn things like that. Let's go to reddit.com/r/Dave Ramsey, and I am doing the greedy meme here as I get ready for the questions. Look forward to them. Always fun to ask questions. Thanks so much for watching, by the way. Commercial Tackle 17, life for life policy. Hey all, I'm aware of term life insurance, but I'm a little mixed about my wife bringing up this life for life policy. She got a little mixed about it. I don't know what that means. Have mixed feelings about it? the kids. They always have new ways of saying things. Life for life policy she got as an alumnus. Okay, can someone give me their take on this plan? No, I don't know what that means. It probably is not as good as term life insurance, even if it doesn't involve whole life. Let's see, I know she has previous medical history, but nothing catastrophic. It doesn't look terrible, but I know whole life can be masked like infinite banking. Like, right, exactly. It can be. And so if it's a whole life involved in there at all, you would do not do that. But also you would make sure you would have term life in place before you would cancel any whole life type of thing or any other policy that's not as beneficial as the term life is. Getting another mortgage in baby step 7, that's a no. I mean, people do that because they think they got to upgrade house all the time, and it's your money, it's your life, and you made it to baby step 7. So theoretically, you know what you're doing, and you'll get back there as soon as you pay that mortgage off. But it's like you're supposed to, once you get to baby step 7, the idea is that if you upgrade, you use the equity in your current house plus savings that you save for in advance, just like and so you try not to do any more mortgages, of course, but some people just gotta upgrade for some reason. Let's see, baby step 7 and now baby steps millionaires. Congratulations. We inherited a nice little piece of land in the country, and I'd love to build our dream home there. Did I read this one? But they change order sometimes, but it would take us at least 10 years to save enough to build with cash. Oh, yeah, okay, yeah. So, I mean, theoretically, you could do it, and the hosts have talked to people about upgrading like that, and they seem to be all right with them getting another mortgage, but that would seem to defeat the purpose if you don't need to do that. If that's just a want, that's a different than wanting a candy bar and going and buying it. That's different than talking about hundreds and hundreds of thousands of dollars. Generally, I would say not do that and say, why do you need to do that? So and here's the deal too. If you didn't inherit that nice little piece of land, would you still be looking to buy land and build a home somewhere? I mean, you think that you having the land already is going to save you money, but probably it won't. Not if you're doing the building instead of buying a pre-built home already. Even a brand new pre-built home that nobody else has lived in, you could do that. But that's always, people do call into the Ramsey show about this kind of stuff all the time, where they get something for free, but that requires them to spend more money. And so that's generally a nar on that. Shout out to all my Australian fans. I don't think I have any. Maybe show me. Accomplished drag 388. Paying off mortgage, Wi-Fi, both 64. Will you still need me? Will you still feed me when I'm 64? Little pitchy dog. And not going to Hollywood and still working. We have about 190K in debt, okay? 160K and 30K in home equity. What, did you need to improve the house or something? Or you took it out to pay off debt? It's moving it around, making you think you've done something, and you tapped your net worth there. Let's see, left on our house currently valued at around 850K. That's a good, that's a lot of equity. Have interest only mortgage that I add some additional principal to every month. You didn't get down to, you must have put down a heck of a down payment, or this is like a refinance deal to have the interest only mortgage. And so Yeah, that's not going to be advised. That I add some additional principal to. That's not going to be advised. So when you're on steps 4, 5, and 6, you're supposed to pay off the mortgage early and not just pay interest only on it. So let's see. Do I continue this or accelerate to pay out the balance? Yes, you accelerate to pay out the balance instead of spending money on what else are you spending money on things? What things are you spending money on? Our only deduction is property tax, which is maxed at 10K due to the change in SALT. Okay, so the interest payments on the mortgage do also help reduce our tax burden. Thanks. Okay. Didn't say what 62 comments, too many to go through. Didn't say what step on. Could be in any of the steps even. Left on our house. That right? This doesn't say that's our only debt. It doesn't say that anywhere. So would have to have further information, but generally that's a NAR, assuming you're in steps 4, 5, and 6. It says pay off the mortgage early instead of doing whatever dumb stuff was happening here with the interest only. What up, Az? But that's just decide how important living in the little house on that land is to you and your wife. If it is important, then go back to work for 2, 3 years and save to pay cash for it. Okay, that's a good idea as well. That could work. This is why it's good to have more than one person on the show, which Dave figured out. I already figured out. I already knew it. It's just finding somebody to do that. Aslan, are you available to be on the show as a co-host while not receiving any pay for it? What up, Sid? Sid doesn't have the time. She has been invited many times. Too busy. About to get busier. Simple Amphibian 422. How to make my savings work for me? Well, you should have them in a bank and at least be getting a little bit of interest on it, if not high yield interest account, interest savings. Let's see. I am 26, renting to myself in an average cost of living area. I have renting by myself, not renting to myself. I was about to go back and say, what does that mean? I have about $60,000 worth of savings split up this way. 30,000 in investments, 401k, and S&P 500. Okay, again, S&P 500, that would be a mutual fund and not the account that it's in. 401k is the account that it's in. Now, does that mean you just have the S&P 500 index fund in your account? That's the only thing you are invested again in? That is not Dave's advice. Let's see. So that you would not touch, regardless if it's in retirement investing. If the 401k is separate from what the S&P 500 is in, if that's just a non-retirement account, non-tax advantaged brokerage account, then you could just move that out and pull that to something. Put that to something different, but that's up to you, and you wouldn't have that extra investing unless you were on step 7. You would only be investing 15% of your gross income while you still have a mortgage to pay for, or step 5 to take care of a kid college as well. I have about $30,000 in the bank. Okay, 25,000 in CDs. Dave, not a fan of CDs. Go high yield savings account, generally has better options, and you don't have to have it in a certain amount of time usually. 6,000 in student loans, down from 15,000 in 1.5 years. Yeah, that's great, but you shouldn't add this extra savings at the same time. You have 1,000, and this is what people should lead with, or have the baby step on there. That would make it easier for me, but yeah, you don't have extra savings beyond $1,000, my friend, while you have step 2 debt, which means non-mortgage debt, of which student loans are. So that's great that you've been paying on them, but there's none of this extra savings. So that's going to be, so you could pay that off tomorrow. The problem is with your dumb CDs, you probably get a penalty to take it out early. So, and that's why it's dumb to put it in there. I'm paying them off in lump sums in addition to monthly payments. I mean, I guess if you get it, but you're not supposed to save up money yourself in a CD or in any kind of investment and then pay off a loan. That's as dumb as crap. You don't do that. You just take that money and pay off the stuff early, cut out the middleman there. Maybe trying to max min interest payment. Basically, debt leverage is what you're doing there. Trying to, if you think you can make more in interest than you are getting charged in interest, you know, that's not the Ramsey advice either. Let's see, where were we? CD is generating more value than the loans are costing me at this point. Due to the pandemic and this economy and all a bunch of other dumb crap that is not actually the reason. Let's see. Due to the pandy and unforeseen layoff last year, I'm feeling behind in my savings. I can't help your feelings. We don't have any, there's no feelings fixing in the baby steps. Now, if you call and talk to Dr. Deloney, maybe he could help you a little bit with that. But, and also the I'm feeling might be the kind of, you know, the kind of reality show kind of, I feel like for me, you know, that doesn't matter. How about what you, let's use what we know about things instead. Facts when making, facts should be, and reality should be more a part of money, financial matters than feelings. So, and not sure how to make what I have work for me. Well, you don't have any debt is the first thing if you would like to follow the Ramsey advice, and that would be the way to do that, not trying to debt leverage. So Mr. Ramsey is actually the opposite of debt leverage, but apparently this person did not know that or doesn't understand what debt leverage is or doesn't understand why what he's doing doesn't go against or does go against the Ramsey advice. Steve is not a therapist, not feelings approved. That's right. They don't approve. I approve of them, but you know, when it comes to like money matters in there, and also it's the whole thing about that wasn't a problem with how he feels about it. That's the problem is that he is trying to min-max, as we said, by debt leveraging to try to make a little bit more money than he's paying in interest. Okay? Now doing that isn't going to make you feel, and even doing that, he feels like he's not having enough, he doesn't have enough, he's behind in savings. And so I guess he's including investments and savings, but yeah, so he wants more. He's doing it wrong in debt leveraging, but he still wants more. So that is probably a thing. Either he doesn't understand what's going on, or it is a feelings thing and needs to accept the reality of the situation, but may not even be, you know, people that would do this kind of thing, like all this, may actually not understand the Ramsey advice, the baby steps, and they also may not be able to think about money in any other way than they think about it. And so that is when you might need some counseling, or at least someone to explain the way you should be thinking about it, or at least an alternate way. You know, he's welcome to do whatever he wants to with his money, but he's the one saying he's not satisfied. He's feeling behind in savings. Well, I know how you can fix that, but first you're going to use all your savings to pay off all your debt first. Congratulations. And then now you have all your money that you're not paying the payments anymore, and you're not paying that interest anymore, and then you can invest that. Congratulations. Lala Banana, Lala Banana Yay. Okay. Keep making mistakes. Well, that's going to happen because people are human. Let's see. Young investor. What up? Oh, Sid had to stop at the grocery store. Sorry I'm late. Oh, you are forgiven this time, Sid. As I said, I think you put a lot of effort into getting a job to cover expenses and then complete baby step 2. Has the cash to do it. Right. You could always, yeah, work more. I didn't even think about that part. Work more. Work more. Have feelings less. Has the cash to do it, but there is some uncertainty since he is not working. Did he say he wasn't working? Because I totally missed that. This is why Aslan made me put my webcam frame up at the top so she could see all the question. So she knows the answer before I do. Unless you are looking it up on your own computer and you looked at the rest of the thing, not having a job would seem to be something you would put before that. So we'll find out about that. 24-year-old, I do invest in my max in index funds. You are leaving, index funds better than nothing, but you're leaving money on the table. Young investor. Let's go ahead on here to the S&P 500. So if you just have the S&P 500, in the last 5 years, 82.15%. But the NASDAQ has even more than that. Look, 106.84%. How many percent do you want to leave on the table? So, but of course, the Ramsey advice is to invest equally, 25% each. And this is just for retirement. This is not some side investing because you shouldn't be doing any of that until you're on step 7. Small cap, mid cap, large cap, and managed mutual funds. And mine beat the indexes even after you take out the higher expense ratio. And it's not that much more. I think all of them are like right around 1% or so. And so if, like, for example, if you just have S&P 500, and again, let's just do the last year, 22.63 and 26.56. And so still you can subtract 1 from that and it still beats the S&P 500 by 4%. Even if there were another 1% higher expense on that. So yeah, so you can do that, but the problem is being 24, I mean, you can't just think about investing. You have to think about purchases that you will want to be making. Like if you will, how soon will you need a car? Or if you have one already, how soon will you need another one? Are you going to want to buy a house? Are you trying to pay for college and trade school? That kind of thing. And so you wouldn't want to lock up your money in a retirement account because there's penalties for taking it out if you all of a sudden need it. Oh, just going off with the layoff last year and did not say he was working. Okay, gotcha. Healthier snack today, trail mix and milk. That's right. You said you were going to do trail mix. So, but yeah, you don't want to start investing too early. People have like open investing accounts for 1-year-old. Open a Roth IRA for that. Well, you can't do it for that, but it's just investing account, and that's fine because you can take money out of a non-retirement account, but there's no need to do that if you know you're going to need the money for something. Like there's no need to unless you have 5 years. And then you can use the market rather, as a piggy bank for saving for a house. So if you're not going to buy one for 5 years and you're sure you're not, anything less than 5, you can use that. But anything less than 5 years, it's more of a chance that the market might be down the exact second you want to take the money out to buy a house. And when you take the money out and it's down, you are locking in those losses. And so with retirement, it's not as much of an issue because you're not touching that until retirement anyway. So you don't have that 5-year time limit required because it's going to be way more than that anyway. Let's see. Keep making mistakes. Here we go. Like a normal human, that does happen. Keep making mistakes. Nobody's perfect. Haven't sacrificed like I could. Okay, you made those mistakes. Sure. Got photos taken last summer. Bought art supplies that I haven't even used. Yep. Can't seem to budget food well, etc. I still paid off over 20K last year. That part is great. You're not doing it correctly. It doesn't say buy things and then don't use them. For sure, it doesn't say that anywhere on the baby steps. Let's see. Disabled single mom with no support. That's been my excuse at times. I can understand why you would want that to be an excuse. But it just feels like, for me, I haven't done as well as I could with the baby steps. You haven't. I mean, even if you took that one thing, you bought art supplies that you didn't use. And you can't seem to budget food well. Well, you know, I mean, it's easy to do. It's not as hard as you think it is. You can look at your receipt of everything that you bought and then say, oh, well, that was dumb, and cross that out and don't ever buy that again until you get on baby step 4, that kind of thing. And so, yeah, it should be easy peasy, but I mean, if you can't do it, if you need extra help, perhaps there's some kind of financial help, kind of, as far as telling you how to do financial stuff like budgets and so forth. Maybe the community has one, the city has one, or your church has something like that that can help you. Or, you know, maybe just general counseling as well, because there may be some other thing happening there where it's like a mental block, you know, because you're disabled. I'm sure if I was disabled, I'm sure I would be upset about that, and I'm sure that would, you know, that would take a toll on your optimism and so forth. So, you know, definitely, you know, understand without actually being in that situation to be able to understand fully, but I can see how that would definitely happen in most people. Let's see, extra margin now, income, kind of slacking on paying the last of it off. It's not interest bearing. Oh yeah, and so any excuse, you're looking for any excuse to not pay it off. And so again, that's a in your head thing there. If you can't convince yourself that the baby steps are the right thing to do, why'd you start them to begin with? Go back with that and think about why you started them to begin with, and that reason should be the same reason that you should go ahead and pay it off instead of spending the money on something else, which I guess is happening. And you shouldn't be saving more than $1,000 emergency fund because I said so. No, you shouldn't be saving more than $1,000 emergency fund because you don't until you get to step 3 and you have step 2 debt. What else is it? I guess part of me is a bit flustered about what's going on politically. So I feel like, for me, I'm in storm mode. Okay, you get no sympathy on this whatsoever. That is just dumb as crap. Okay? What happens in the White House is nowhere near important, and nowhere near as important as what happens in your house. That's been a Dave Ramsey saying, and he's correct about that. Everything that Donald Trump signed on his first day in office, all the executive orders, all the last minute stuff that Biden did before he left, none of that is affecting whether you pay that off or not. And none of it affects if it's a good idea for you to pay off your debt or not. It still is. Newsflash. No matter who's in the Oval Office. The baby steps have worked excellently for 30 years. and there's been a lot of different parties in there, and none of them were doing well financially with the government, because the government still continues to take out debt to this day. So even the conservatives borrow money, or they sit by while the government borrows money, and they don't try to take care of it. Sort of. Maybe Elon Musk is trying to reduce some spending in the government too, but I don't think it'll be anything more than a drop in the bucket on that. But just trying to keep going in a rational way. Well, rational would be embracing the reality that what happens in politics does not affect whether it's a good idea to pay off debt or not. So, let's see. Federal aid is not coming for disabled single moms. Right, it didn't come. Yeah, it's coming for welfare fraud, right? Yeah, it didn't come for. I wouldn't expect that a handout did not come during a Democratic president's reign. I wouldn't expect that it would come during a conservative president's reign either. As reign is probably a term, I guess. Reign is probably too king-like. The sweet lizard, what time is it? Got to get out of here right in an hour today. Promise my son. The total money makeover for non-U.S. resident. All right. Well, the retirement fund names are gonna be different. The retirement account names, because they don't have anything like a Roth account or a 401k account, because that is part of the tax law, is what that is. Senator Roth suggested came up with the idea for the Roth IRA. Thank you. So I don't remember if he was a senator or a congressman. I cannot remember. But as far as 401k, it's like paragraph 401 and section K of that particular law, and that's why it's called a 401k. Or as our good pal John Deloney calls it, a 401. He doesn't have time to do, and I can't say anything because all abbreves are approved by me. So I can't be a hypocrite and say that's bad of him to do that. Let's say I found interesting non-U.S. resident, so I'll give it a break here. Found interesting Dave Ramsey show in his book because I have a lot of debts, and that would make it interesting to me too. That's why it originally was interesting to me. And recently started my total money makeover from baby step 1. That's where you should start. Good job. I keep reading the book and just finished reading the retirement baby step. Okay. I don't know if that's like a Legacy Journey or some kind of other book. That's fine to read, but you need to be concentrating on step 1 and then step 2. Hopefully you're on step 2 now. But I live in a post-Soviet country, and many of the aspects of the book don't directly apply to me. Like what? Would total money makeover still work if I can invest in the U.S. market only with additional fees from international brokers and 15 to 20% fees from my government? You got to run the math on that and see if taking that out still makes more money than investing in your own country. So you would have to run the math on that. I don't personally know that. Would it still work if I invest my retirement in index funds because we don't have tax-free IRA? Okay. Yeah. Guess what? If you invest in index funds and you get to retirement, that's going to have you having more for retirement than if you invested in nothing. So you have to work with what you got there. I'm very new to investing, but already pretty sure investing in U.S. market with USD still outweigh any fees. It might. You might have to. I wouldn't assume anything, or assume, as our British friends say for some reason. What else was I thinking about? I was gonna tell this person someone else. Yeah, so and that's generally, like I said, what it is. He didn't say he had any problem with understanding any of it. It's just the investing and the, like I said, retirement account types obviously going to be different country to country, and government laws as well and what they can invest in. Max 75577. I'm in a dilemma, and this is the best place for financial advice. I think I read this one. Last time I posted here, I was asking for advice about my budget. Well, I'm happy to say I made significant improvements. There's one of those abbreves. I managed to lower my insurance from 572 to 200. Huge accomplishment for sure. Now my next dilemma. Don't keep looking for dilemmas. If you get out of one dilemma, how about you just stay chill for a little while without looking for a next one? So maybe it just happened to her. My next dilemma is that my husband and I are expecting our first baby in May. How is that a dilemma? We're currently trying to decide whether to stay in our apartment or move. Right now we pay $19.75 a month, $1,975, including utilities for an 800 square foot unit on the third floor of an apartment complex. Parking is always an issue. Justification station for moving here. Parking always an issue. Our neighbors frequently throw parties, which makes me nervous with a baby. We recently found an opportunity to rent a house for less. Okay, tell me more. Hear me out. I'm hearing you out. Less than what we're currently paying. Okay. The house is in a quiet neighborhood. It has a backyard, a driveway, about 1,500 square feet. So what's the problem here? How much is it going to cost to move? My biggest advantage with this move would be not having to carry a stroller, car seat, baby, and groceries up 3 flights of stairs. I gotcha. No elevator. And not to mention, I wouldn't have to deal with noisy neighbors, right? Got it. Sharing a wall. The catch, of course there is one, because otherwise you would have just done it, right? Our current lease doesn't end until June. Boop, boop, boo doo. And hey, guess what? It is, what is it? January now. That's, no, it's February now. That's 5 months. A little bit less than 5 months. But after speaking with the landlords of the house, is that like the House of the Dragon? They are willing to work with us to an extent. What does that mean? We told them we wouldn't be able to move until at least April since we don't want to pay double rent for too long, doubling it. I completely understand that they need their rental income. They do, as they've worked hard to maintain this out. Last night, we got a call to discuss options, and they made us an offer. If we sign a lease now, they would only require us to pay $500 for March, with full payment starting in April. This means we would be double paying rent in April and May, both for our apartment and the new house, right? And if that's cheaper than breaking the lease, then, I mean, you might do that. You said it's cheaper, so I don't need to know any of that stuff. Total extra cost $4,000, which we can cash flow. Okay, you can cash flow it as well, and so that's fine to get to do a move like that. To your downsizing, it seems like downsizing in rent and upsizing in place to live, and so that is fine to do that because you're not taking on extra debt. So that is fine to do that in baby step 2, even. Additionally, they're asking for a $2,000 security deposit, right? Not because of bad credit, because they're private landlords, yeah. And require the first month's rent up front, okay, plus an additional fee. Did you include that in there? Our plan is to use our $1,900 tax return and supplement with our income to cover this cost, okay? So that's basically cash flowing it. You should have had that money already instead of getting that much of a return. Concerns and considerations. Oh my goodness gracious me. So much. What? We never rented from a private landlord. They seem great. But we've been in our complex for 2 years, so it's a new experience for us. I have. My ex-wife and I did. We didn't have any problem. And she was one of those that house hacked. She was the she lived. It was a townhouse, and she lived in the next door one, and so we didn't have any problem though. So this one you can't say, oh, you won't have a problem with private landlord because one person may, one person may not. So okay, so that you just got to roll the dice on. Unfortunately, you don't know ahead of time. Always in motion is the future, says Master Yoda in The Empire Strikes Back. With the baby coming so soon, I don't want to put us in a financial bind. That is wise as well. Looking at the numbers, we'd still be financially stable. We would be in the positive every month and be able to save a little. Right now we live, yeah, that's true. I didn't think about stork mode. Stork mode, you're just supposed to pile up cash and not spend any money on moving. Let's see, where were we? Put us up, looking at the numbers, we'd be financially stable. So we would be in the positive every month and able to save a little. So, but you're supposed to pile up stuff instead. So I don't know if this person is still thinking about paying off debt during that time, because you would just pay minimums. While in stork mode, the move during it, that's a different question. I don't know how I feel about that. Probably no. I'm probably waiting until afterwards, and then you just rent somewhere later after the pregnancy. Let's see. We would be right now we live off just my husband's paycheck. My entire paycheck, about $1,200. Every 2 weeks goes into savings. Okay. Financial benefit of moving the new. Okay. The new rental is cheaper because it's privately owned. Okay. You said that already. You gave us the numbers already, and so we see the financial benefit. Here's a cost breakdown. Current rent and total rent. Oh, because you got to pay the same. I got you. Through June, because it works through June. I got you. Okay. And this is with those deal numbers that they are willing to do. Let's see. Total extra, again, $4,000. Extra cost of $4,000, and they can cash flow it. I'm still probably not going to do it during the pregnancy because you have to have money saved up in case there is some kind of issue with that. And so the time to think about that would have been before you signed the lease. You know, it shouldn't, all be, oh, now we're having a baby, so that's a game changer. So you can't think about like that before you sign a lease. So, you can't tell the future, I understand, but you have to think ahead sometimes. Oh, let's see what we got in the chat. Oh, she's worried Trump is coming to take her benefits. Oh, that she's getting. I got you, Sid. Okay. Trump and Musk are not seeking out disabled single parents to cut their benefits off. No. I mean, pretty much from everything I've seen, it's just stuff that shouldn't have been a thing in the first place. Like that shouldn't have been expansion of government that they're trying to cut out. HB says the trail mix is fire times 4, fire squared. Aslan says a nice excuse, but staying in debt is not going to help you no matter what is going on in politics. That's true. That much is certain. But, people use that, the political situation, they use that just like the in this economy, and you can't get a job in this economy. No, no, none of that's true. That's just you talking. You're basically moving into justification station when you're doing that stuff for dumb things that you want to do. Sleeping Cow 7, emergency fund Q, question, I guess. And I guess that's in a brief, so I guess I have to allow it as well. My husband and I are relatively new homeowners. Congratulations, and own a home that we rent out to tenants while we rent our apartment in another state. Long story short, we plan to return to where our home is in a few years and did not want to sell, so we are renting it. All right, not advised at all. Let's see, do people have separate emergency funds for their home in addition to a standard emergency fund? No. That's why you should have a 6-month emergency fund for sure, but no. Especially if you're not living in it and you're just renting it out. That would be business. That would be retained earnings. And so you might have that in a business emergency fund. That would be your retained earnings. But that means whatever probably little bit you're getting because unless you own the home outright, or if you have a mortgage on it, let's see, expenses factored in include our rent and a home mortgage. Right. So you debt leveraging to have a rental property and the house that you want to live in, I guess, when you go back there. So yeah, this is all going to be a narrow for me. So again, you could do that. It doesn't say how much. Let's see if it says how much she makes out of it. Currently, we have a classic emergency fund, which is about 3 months of expenses. That's not a classic one. That's the only type. It's 3 to 6 month expenses. And if you're worried about emergencies, why do you only have 3 months of expenses? Yeah, you're thinking about it wrong. Oh, working on building. Okay, expenses factored in include rent as well as other necessities. I have started building up a specific emergency fund that has about 20K in it. What should I be aiming for? You should apply that 20K to the baby steps instead of doing that. It does not say. What I would need from this person is what baby step are you on? If you can pay off that mortgage fast, then that's less of an issue. But if you're trying to just string it out until you move back, I would probably recommend to sell. It depends on the other factors involved. So not quite enough information in that one. Smart time to buy a car or stash cash. Do you need a car? We don't time any market, not the used car market, not the new car market, not investing for retirement, not investing at all. We don't do that. We don't time any markets. We're on baby step 6. Have $53,000 in our car savings fund. If you have any debt, I'm going to whap you. Husband's car, 2015 Ford F-150, my car, 24 Mazda 6. Nothing wrong with my car, but I'd like to upgrade before it completely loses its value. I'm sure it could sell for $7,000, so our car fund would be $60,000. I want to buy a 2021 Tesla Model S. So that's not just upgrading, and and there's nothing wrong with your car either. So that's just, when you do that, that means it's just a toy. So you're buying a toy. If you're on steps, 4, 5, and you're on baby step 6, said, so you would rather have the Tesla than put that money on the house. I would not. On step 6, you get to make that decision. So more than 40K out the door. That would leave 20K in our car fund. The original plan was to buy in the summer or fall, but with the tariffs going into effect, should we do it now before car prices get crazy? I don't know that they would get crazy. Also, you could buy an American vehicle. Where's the Tesla made? I don't know where the Tesla is made, and what that's considered. Or don't do it all and stash cash. I mean, if you're that worried about the tariffs going into effect, then maybe you want to have extra savings, but you shouldn't. You should be putting that money toward the house. Instead, this money is separate from our emergency fund of $20,000. Great, should be. My emotional notes. Yeah, we wanted the car ever since it came out. Wah. So that's great. You know, I'm not doing it. You've been on step 6. You can string out paying the house as long as you want, but it doesn't say to do that. It says pay off your mortgage early, and you may still be able to do that even if you get the car. Again, I don't know, don't have all that information, but otherwise that would be that's the advice. So good luck. That's kind of, a lot of them are some things that I wouldn't do, or even that Dave wouldn't recommend or anything like that. But once you're on step 6, you get to decide. You always get to decide whether you want to follow the baby steps or not. That's up to you. But it does say you should be putting extra to that every single month, because 4, 5, and 6, it's all at the same time. Except when you do, like you're doing 4 and 5, and then you run out of the extra money, but you have extra money in a car fund when you don't need to replace a car yet. So, and if you want to have a car fund, if you want to have 60,000 in a buy new car fund, or new to me, a used car even, if you want to have that a year in advance before you need it, I guess my name is Paul, and that's between y'all. But again, I'd put that money on the mortgage and get that paid off. And then after the mortgage is paid off, then you can do whatever you want. You can save up however much you want. If you're a millionaire at that point, you can buy a new car if you want. Let's see. Hi all. Recently lost both my parents and am in the... yeah, I did that. All right. Oops. Almost started another one. I don't have time. Mexican for me and my son this evening. Me and my son is correct. YouTube.com/CoachSteveMoney is the channel that you're watching this on, and you just scroll past the Oak Island, new video out this morning on that. And Ramsey Show Aftershow show is below that. And below that one, answering your financial questions. And the music playlist has 11 Ramsey adjacent songs in there. Alrighty. And so once again, Ramsey Solutions certified coach here, financial coach. And if you've got money problems, or you just want to make sure you are on the right track, you can schedule a free financial coaching consultation with me at calendly.com/coachstevemoney. You can, that information's in the ticker and in the video description. You can email me, coachstevemoney@gmail.com, about the channel, financial coaching, anything that's on your mind. Donations can go to paypal.me/coachstevemoney, to CashApp, $CoachSteveMoney, or Walmart gift card again to coachstevemoney@gmail.com. Upcoming streams is this show. The Ramsey Show Aftershow show will be at 5:25 p.m. Eastern Time, Monday through Friday, until further notice. So that's as soon as Dave leaves the YouTube on that day's new show, which is delayed 2 hours. Then I go on at 5:25 p.m. Eastern Time. Alrighty, thank you so much for watching. Please subscribe, like, and comment, and thank you if you have done that already. And as always, make smart financial decisions, not just some of the days, every day.